Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Monday, December the 5th, 2016, and this is the Daily Report for Gold and Silver. Even with a weakening U.S. dollar, we still have the precious metals pretty much across the board trading lower today. We have gold, although trading well off of the lows. Low today was 11.58, has closed lower off about $5-6 at 11.72, and the high today 11.90. So we have seen quite a range, about a $30 plus range in the market today, and still unable to close in positive territory. When we look at silver, more of the same, although silver is not off nearly as much as gold was in terms of percentages, but we do have silver trading lower today, nominally lower, off about 2 cents on the day at 16.81, the high 17.05, and the low 16.54. Let's take a look at our first chart. So traders, yes, in fact, gold did close well off of its lows today. But there's a couple of things that are very, very noteworthy in today's activity. The first thing is, and you can really see this by looking at a weekly chart, although it is only Monday, and so this last bar represents today's trading activity rather than the entire week. Right in here, you can see that the range, the distance between the high and the low in today's market is roughly equivalent of the entire range last week. We've had quite a range on the first day of the week. Secondly, we had an impeccably weak U.S. dollar today, dollar really selling off, but that at the same time was not able to really show us any kind of support in terms of precious metals pricing. And so I draw your attention to the Kitco Gold Index that I've just pulled up. And on that, you can see with gold closing down roughly $7 on the day. That's after actually giving it over a $6 boost from a weakening U.S. dollar. Normal trading actually took gold down about $13 on the close, and I think that's quite interesting. I do stand corrected, although platinum and palladium did close higher, so the entire precious metals complex was not lower on the day. However, gold and silver were. So traders, in terms of our daily move in gold, and I have converted our weekly now to a daily chart. Instead of bars, we are using candles because there is a pattern that I do want to discuss. But you can really see how evident this extreme range was today, especially on the daily chart when we take a look at this candle. But what I'm finding interesting is the fact that we did close really above our 61% retracement, that 1170, although we have seen a multitude of lows going into this area both this week as well as last, we continually close above that particular price point, which brings me to the pattern that we're looking at. This two-day pattern in which we have a green candle, which is completely engulfed by the current day, which is a red candle, is what is simply called an engulfing bearish. Now, one of the criteria for an engulfing bearish is that it has to occur after an uptrend. Well, we certainly don't get that in this particular case. The market has been in a defined downtrend. And this pattern, when found in a defined downtrend, has been called, or is called, I should say, a last engulfing bearish. Because when found after a defined downtrend like this, it can signal an exhaustion of the current trend, and that last engulfing bearish is kind of that overdone market that is about to find some kind of support in the bottom. So we are seeing some genuine signs on a technical basis that we could be finding some sort of a base here. Of course, we've sat on the sidelines. We are flat in this market. We haven't taken a position. And as my long-term traders know, typically when we're out of the market, my more aggressive traders are shorting the market. But I think it's time we begin to look to see how it reacts at this point. Now, whereas the fundamentals really have not changed in the marketplace, and the factors that short-term optimism that I've labeled, that Trump effect, really has continued to guide precious metals lower and equities higher. At the same time, we know that any kind of news out there can really change the dynamics of the market, And so we have an extremely oversold market on a technical basis, which you can see in a number of technical studies. The one that I've just pulled up is taking a daily chart and basically plotting our stochastics. Stochastics are simply where we look at the highest high and the lowest low off a time cycle, or time period, I should say, and compare the current price to that highest high or lowest low. When you're down around zero, what that's telling you is that when we look at the lows and compare them to recent lows, they are very, very near the lowest lows in that time cycle. When you get up to 100, of course, that means you are at the highs of that time cycle. You can see that we have the cross right in here, and the market came down. We are now getting this extremely oversold scenario. We've had a cross once, but it's already looks as though it could have invalidated. So we'll probably want to look at something like the MACD, which is moving average convergence divergence. Now, when we look at the MACD, which is what I just pulled up, we can see that although they are coming together, they are converging right now. We haven't seen that cross that we will typically look for, and that cross is what on a technical basis will signal a key pivot point. You get the cross here on a buy side. That, of course, you can see it lags behind current market activity, but that corresponds to this market moving up here. And then you get a sell right in here. Let me try to line that up. And of course, this particular study is always going to be a lagging indicator because it's average base, but you can see how that works. And so now, as we have this market coming down in this area, we simply want to wait until the point, based on this study, until we have this lower red line here cross above the green line coming down, and that would signal a buy on our MACD. So traders, while it's certainly, I don't believe, time to enter the market from the long side, I also believe at this point that it might not be time to continue to look to short the market. We have seen a base beginning to form at this level. What we have not seen is any kind of pivot point or sustained rally off of this, moving to higher pricing. And because of that, we could sincerely still move to lower pricing. If we break hard below this price point, though, traders, I believe we could that would signal a pretty aggressive sell-off, maybe taking us as low as about 1120. That being said, though, we have seen some signs of exhaustion. Let's see how the next couple of days unfold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.